Good morning. My name is Jason Allen. I am a realtor in Palm Springs, California. Each Monday, I like to bring you a market report for one of the cities that I focus on. So I primarily do my business in four cities in the Valley: Palm Springs, Cathedral City, Rancho Mirage, Palm Desert. I do work in Indian Wells, smaller market, and I do some work in Desert Hot Springs, also a smaller market. The four that I concentrate on, I like to pick one each week. Today is Palm Desert. If you stand by, I'm going to share my screen and I'll jump right into the numbers. And here we are, Palm Desert, single family homes. For those that haven't joined me before, I focus first on single family dwellings, then I go condos, then I look a little broader on numbers on another chart. So here we are, unit sales. Now we're comparing this January 2024 to January 2023. We've had a 20% increase in overall sales, single family dwellings in Palm Desert. The median price, 582,250. Median is the house right in the middle. So of the houses, the 48 houses we sold, they're taking the middle, and then they're saying half sold above that, half sold below that. The median is down 9.5% compared to last year. But there's a good reason for that. That doesn't mean that all house prices are dropping. What it means is, and I'm going to jump over to this other chart very quickly, we're selling fewer large houses. That's the only reason the median has gone down. Inventory is up about 9% compared to last year. So you can see we're not at this high water mark. And certainly if we went pre-COVID, we're not nearly in those numbers. So the market is still rather starved for houses and condos in the Valley. Days on market, 55. That's down a bit compared to last year. Excuse me, sales to list price. So in this case, when we look at all the homes that came to market, all the single family dwellings that came to market and did not have a price reduction, on average, sellers saw 94% of their asking price. Now, that means that some went above and some went below. So we are seeing properties going above asking, especially when there's one or two buyers, maybe more, interested in that property. Or if the seller is essentially being very conservative with their list price and the market sees greater value than they did when they listed it. That's what's pushing those numbers north. Now, if a seller had one or more price reduction, they're seeing about 93% of their original list price on average. So what does this tell me? Like, without much difference between the two of these, that it may make sense to anticipate more than one price reduction without sacrificing a whole lot. Now, I'm going to come back to price reductions and so forth in a moment. Here's the number. Here's what I was saying. 33% of these 48 homes went over the asking price, and that's where we get this average. Month supply, about 6.5. We say a balanced market is 6 months supply. 4 months, we're still in a seller's market. And the median sales price per square foot went up slightly over January 23. We're not seeing wholesale price reductions unless there's some external factors. In Palm Springs, we have a couple of external factors that have to do with vacation rental opportunities, but we're not seeing like this massive fall off. Sold within 30 days. So 38% of those 48 houses sold within 30 days, 67%, and that's cumulative from the 38 to the 67, sold within 60 days. And then in 90 days, 85% of the houses sold. I always say that leaves 15% that are either still on the market or were canceled or expired. Let me jump over to condos in Palm Desert. 45 sales, so somewhat consistent with single family dwellings. That is up a whopping 66.7% over January of last year. Buyers are returning to the market. That's what we're seeing here. And in as much as house prices have stayed elevated, people who can't afford a house are going for a condo. It's not rocket science. What I do is not rocket science. You study these numbers enough and you begin to understand and see the patterns. Median sales price down 2%. I'm going to guess if I jump over to this other chart, which I will return to in a bit, I have to go over to condos. Let me see. Are we selling? Yeah, yeah. We're down on high-priced condos in Palm Desert. So that would bring the median sales price down. Inventory at 181 units. That's up 5% almost from 23. Not a whole lot. Days on market, much longer cycle compared to the single family dwelling. So 74, that's over 2 months, 2.5 months we're talking about that you're on the market. Sales to list price, 96.4. Sales to original list price, 93.8. A little bit of a spread there. 29% almost of the condos in Palm Desert are going above the list price, above the asking price. And that's what's keeping this up. And it's also up from last year. Month supply of inventory, almost 4. And then median sales price per square foot down 6.2%. 18% of the homes sold within 30 days, 47% within 60 days, 69% sold within 90 days. Now, I want to go back to the sales to list price, these things. All right. Which houses, actually, before I go there, let me just talk very quickly. Let's go back to houses. And this, I like the folks at Chicago Titles chart because of two reasons. One, you get this little quick, is it a seller's market? Is it a buyer's market? We're right on the borderline. We've been on that borderline for months. If we see inventory drop, we're going to go into a stronger seller's market. If we, as the inventory creeps up, we're going to see it to be a stronger buyer's market. And then we get into the quartile. So we get a little bit more detail here and we see, again, I'm like a broken record throughout the entire valley. We just see consistency. We see these wild swings happened as interest rates went wonky and COVID started to open up. There were these major effects to the market, the major impacts to the market. We're not seeing that. And then I jump over here, condos, similar. We're right on the border between a buyer and a seller's market. And then I'll scroll down, very consistent here. Not a lot of changes. All right, I'm going to jump back over here and just quickly, this 96.4, 93.8. And then if we go to single family dwellings, 94 point. All right, so in short, if you think about coming to the market, and this is where the technical aspects and the marketing aspects sort of merge. Right now, I can tell you buyers are very choosy, and they can be choosy because interest rates are higher. It's a more serious commitment. We're not seeing radical price increases where we were during COVID. Like, I don't know, if I bought a house or a condo for $500,000 and it needed work, A, it was the only thing I could get into, and B, I could just wait 6 months or a year and the price would be higher, so it wouldn't matter. Now people are very price conscious, very price sensitive. And we buy, by the way, on our monthly payment. So even men and women who are buying homes and paying cash, they're looking closely at what are my maintenance costs? What are my HOA dues? What are my utility costs? What are my taxes? So again, people tend to look in terms of cash flow. Well, let's go back to the marketing aspect for a moment. And we say, okay, I'm going to sell my condo for $500,000 and I'm moving out because I've already bought my house somewhere else. I had a job reload. Now my house is empty. Here's the thing about an empty house. All of the flaws become that much more visible. Buyers are no longer sort of taken in by the aesthetics of the property or the aesthetics of the way it's presented. And they're looking at every cracked tile, every door and window that doesn't work, the dingy color on the walls or where your pictures were removed, all of those things. So to get the most money, it makes sense to invest a little money. If your house is empty, let's get it repainted on the inside. If it needs to be repainted on the outside, let's get it repainted on the outside. And if it needs to be staged, let's look at staging. And you should be, oh, Jason, I don't want to spend that money. But here's the thing. If we go back and we say, I'm going to probably have a price reduction of 5% if my house doesn't sell in the first 30 days or 45 days. That price reduction is probably equivalent to what you would have spent in fluffing the property up and staging. And if not fluffing the property up, at least staging. And that's even if you now have furniture in your house, it may make sense to have a stager come in, consult, edit, tell you what to put away, and maybe bring in a few pieces if what you have doesn't really present it as a model home. So I'll repeat that. The cost of staging and preparing your house is going to be equal to or less than your first price reduction. Once we start to look at the dollars and cents, and then you say, why would I do that? You do that because now the house is going to move more quickly and potentially with more than one offer. And when you have more than one offer, you have competition, and buyers tend to overlook things in an effort to win what they want. All right. That was a lot today. I hope you understood what I was talking about. If you don't, I'm happy to explain it more. I'm always happy to come and talk to groups and public settings. As you can tell, I'm a ham. I love talking to folks. And if I can be of service to you, do not hesitate to reach out. That's all for today. Enjoy your week. Take care.